Hi everybody and welcome back to the channel. It's been another up and down week for the stock market, so as usual we'll start with a look at the main indices over in the US. So starting with the S&P 500, you can see that early in the week there was a nice increase through Monday. Stock market was having a good bullish run, but we can see quite quickly through Tuesday, Wednesday, Thursday, quite a drop off. Obviously it looks quite pronounced on the charts, but what we're seeing here is a little bit of nervousness creeping into the US stock markets, really importing problems from Europe. So everyone will know that in the likes of the UK, France, Spain, pretty much across Europe there's big concerns about COVID second wave. Various countries using different tactics in terms of lockdowns. So the European stock market continues to be tough, and that kind of filtered in to the US markets. I mean, other than that, the US markets were still waiting for the stimulus. If I'm being truthful, I can't see that happening before the elections in early November now. But the markets really seem to have shrugged the stimulus off. It's kind of a feeling that it's going to come, but it's just a question of when. Obviously the outcome of the election's probably more pressing now. And really what it was all about this week in America was continued earnings season. This week with a real focus on the banks. So like the Bank of America, which I hold in the portfolio, JP Morgan, Morgan Stanley, Wells Fargo, they all reported earnings. It was a mixed bag. Bank of America got pretty badly pummeled on the day of their announcement, despite earnings per share being above expectations. But I think the markets were focused on revenue, which missed. Wells Fargo probably had a poor result. I think like JP Morgan fared better, Morgan Stanley as well. But I think there's a general level of skepticism with the banks in terms of how they're managing to perform given the continued global issues around the pandemic and COVID. So S&P 500 was overall down only 0.5%. Dow Jones was slightly less down, 0.2% down, and the Nasdaq fared the worst in the week, down 0.7%. And I think something happened late on Friday, particularly with Amazon. Seemed to be a little bit of a sell-off late in the day, but overall I think it was a flat week. I still generally feel that the market's topped out. If we look at the Shiller P ratio, still operating around 31, 32. I think the market's too hot. I'm being very cautious this week, and as we'll see, as we'll go on to now, I've literally sat on my hands and done nothing. I think I've tinkered around with the portfolio enough over the last few weeks, and I really just was an observer this week. So let's head on over now to the market beat summary. I just want to pick out a couple of stocks that have had an interesting week. Okay, so we're in the market beat portfolio analysis now, and I just want to pick out a couple of stocks that had interesting weeks this week. The first one being Apple. Apple had a much hyped presentation day earlier in the week, particularly around the iPhone 12, but also some other items such as the household Amazon style home, I guess you'd call it home management system. I didn't watch the full presentation, I watched a little bit of it. I think generally the market's sold off, so I think going into the presentation Apple was trading around $124 per share, and it's fallen off to around 119. But this is Apple's real foray into the 5G space. I'm long-term bullish on Apple. I'd like to have more of Apple. I would like it at the right price. I'm not convinced about further investment at this moment. I think further investment at this moment would be fine long term. I'd prefer to see the stock price moving more around the 110, 105 maybe even 100 level, but whether those prices will become available, I'm not so sure. As you can see, I'm still 4.4% up since I invested. Just trying to remind myself my cost basis. So my average cost basis is around 114. So I think if it fell below 114, I'd be interested in further investment in Apple. But at the moment, it's a watch and wait. So it's an interesting week. Bank of America. This is a stock that I believe Warren Buffett is heavily invested in earlier in the year, around August time. And I think that, let's be honest, I think that caused me to invest a little bit in the stock as well. Banks are one of those sectors that's really under the spotlight given everything that's going on with the global economy. Are we moving to negative interest rates? What impact's that going to have on the bank's financial performance? Are we in danger of another Lehman Brothers style collapse? I think personally, you've got to pick your bank stocks wisely. Pick the ones that have strong balance sheets. I don't want to use the phrase too big to fail because we saw what happened with Lehman Brothers, but generally it was a very tough week on the back of the earnings report, which, looking at the earnings report, earnings per share was above expectations, but revenue was down, and I think the markets looked at that. So I've gone from quite a nice positive ROI to now minus 2.4. So it'd be interesting to see if the stock recovers over the coming weeks. The only other stock I really wanted to highlight was Pfizer, which is a recent investment of mine, but it's a stock that I'm really keen on. You can see I'm now trading at plus 4.2% ROI, which is really pleasing. And only yesterday the stock improved by $1.40 per share, and an increase on the day of 3.83%. So the reason for this was some good news with regards to the vaccine. So I won't open the Yahoo Finance article that I'm referring to, but we can see here yesterday Pfizer to apply for emergency authorization use of COVID-19 vaccine in November. So that's next month. On the short-term horizon, positive news that there could be some good developments on the vaccine. And that was something that I had in mind when I invested in Pfizer, because I'd seen that in the EU they were looking to fast track a vaccine, and I felt that was good news. And looking at the fundamentals of the company, it looked undervalued, and I thought it was a good investment. So you can see I've got just shy of $115 in the portfolio. So it's it's got quite a prominent position in the portfolio. So I think overall that's it. So let's head on now into the stats, just to get an update on the stats of the portfolio. Okay, so just to run through now the portfolio stats. As I said, I've sat on my hands this week and just watched the markets from afar, and I haven't made any changes to the portfolio, but it's just interesting to have a run through the various sections that the market beat my statistics page gives. So starting with asset allocation, very little change here. So these numbers are just changing slightly as stock prices move, but no fundamental changes to the percentages overall. So in terms of the largest holdings, the only change here is the swap between Bank of America and Johnson & Johnson. So Johnson & Johnson has now gone above Bank of America in the top. This is the top 1, 2, 3, 4, 5, 6, 7, 8. So the top 8, Johnson & Johnson's gone into 6th position, Bank of America into 7th position, and that's literally because of the slight sell-off on Bank of America following their earnings report. So we'll keep an eye on that, but I don't think there's going to be much changes. As I say, I'm going to have a watching brief at least until after the elections. Looking at the overall portfolio, we can see now that the holdings value dropped from around 3625 last week down to 3607, and that's pretty much in line with the drop in the main indices over in the US. The ROI plus 2.1, I think that's more around plus 2.2. And that's because I've got a little bit of cash in hand that market beat doesn't take account of. In terms of the winners, there's been some changes here. So Consolidated Edison and Duke Energy have dropped out of the list, and in have come Lowe's Companies, and McDonald's. So Lowe's Companies, probably like a B&Q home base for those based in the UK. It's a consumer store. It sounds like it sells a little bit of everything, probably home DIY type store. So good to see that, and no doubt that's doing well in the pandemic as people spend more time in their homes and want to make home improvements and those types of things. McDonald's is continuing to perform well, and it is my biggest holding, so any change positive for McDonald's is good for the portfolio, and it's good to see Xerox and PPG staying around about the levels that they were over the previous weeks, so holding firm despite any headwinds. Exxon and Chevron pretty entrenched at the top of the list, have been for some time. As I mentioned last week, will they merge? Who knows? I don't see any green lights at the end of the tunnel for the oil and gas sector. One of the main issues I'm going to have is feeling a need to sell out these positions. I think I've always said that I'll stay in for the longer term, but the more entrenched things get, the more I wonder whether I could cut my losses and reinvest, even though the sums have fallen. Would the money be better served elsewhere? And that's a debate I'm going to be having in my mind for some time, I can imagine. Walgreens Boots hasn't moved in terms of position, but it has improved on the back of a good earnings report last week, so I think it's probably improved around 3%. I can't see it moving much closer to break even, but we'll see. And in terms of other changes in here, I think Simon Property and Prudential Financial have come in, and eBay and Enterprise Product have dropped out. So I think Prudential Financial was probably impacted by the bank sector's earning reports and mixed reception there. Simon Property Group I need to look into. Recently added into the portfolio, and it's not performing as well as the likes of Realty Income and some of the other rates. But I think it's probably due to the pandemic and the ongoing impact on retail. I believe Simon Property Group focuses on retail space, and obviously people going out to the shops is under pressure. The only benefit in the US being that it's very unlikely that Trump would close businesses down, but generally the market conditions just aren't there at the moment. So hopefully Simon Property Group will improve longer term. I'm going to skip over portfolio performance there. P/E ratio is slightly increased from 20.7 to 20.8, but nothing really to speak of there. Portfolio volatility is completely unchanged. Average market cap's slightly gone up, which is interesting given a little bit of a sell-off on Apple. I'm not really sure what's driving that, but overall market cap has increased from 199 billion to over 200, which is interesting. Forecasted earnings growth has also improved from negative 0.2 to positive 0.4, which is good. And on to dividends. So overall the portfolio dividend yield is pretty static at 3.72%. I think it was around 3.71 last week. Payout ratio is completely unchanged, which is good. I don't want to see that getting any higher. Average growth has come down slightly, but actually managed to increase the annual dividend payout. It was 134.08 last week, and it's increased around $22, and that's due to reinvestment of dividends, which we'll come on to. It's been a quiet-ish week for dividend income, but we'll come on to that, and it's even quieter in the upcoming period. So next week takes us up to the 23rd, so you can see I'm only expecting Simon Property Group to come in, and I actually need to check the ex-dividends dates because I have added Simon Property Group very recently, so it's questionable whether I'm actually going to hit the record and receive that. I need to double check that. Market beat doesn't take account of when you added stocks to a portfolio, so I do need to check whether I'm due some dividend, and so that really takes us to the end of October and into November. So very quiet, but at the end of October we will see some money coming in from Xerox, and in early November AT&T, Lowe's companies, and Enterprise Product Partners. Just quickly on AT&T, actually I could have discussed this earlier, that AT&T has seen a bit of a sell-off. I always had $27.50 as a potential entry point for this stock, and I did enter much higher than that, around 28 I would say. You can see the stock price has fallen off to 27.33, which is a little concerning. You could argue it's a good time to add more. I'm going to be a bit more cautious. I'm concerned about how disrupted this stock is going to be long term. I'm not too bullish on price. I've probably added the stock as a dividend payer more than a growth potential, but it does look very, very cheap at the moment, and you can see P ratio at 16.77, dividend yield at 7.58. So for those interested in adding a dividend stock, it's probably a good time, but I'm just concerned about the sell-off that's happened this week, so I'm going to watch that closely. But overall, that's all. I hope it's been interesting. If you've got any questions, please leave them down below. Please like and subscribe, and stay tuned for more.